Yeah, I welcome you all once again. I'm actually trying all my possible best to assist everyone on how you can understand this forex market. So I'm trying to make everybody understand trading. Hello, guys. I Please, if you're already on, you just hold on. Let more people join. But I just created this very link now for new trader to join those that missed the first one. So just hold on for the new one so that I will start explaining again. So here is where we are. So I will go back now. Uh, so we are welcome back again. I'm actually just trying my best to assist everyone to understand trading. So I know it's not easy. The internet stuff is fucking up sometimes, but we just have to keep trying. So and I believe that in future time we have a better uh, internet and the presentation will be more better than this. So this is my first time of online training. So I've been doing class training in the past years. So please, we should just try and endure this period, and I believe that uh, better days are coming. So now let me share the screen for you guys that are on. So I will start from beginning. I'll start the explanation from beginning again so that you can get it clear. And I hope that the internet will not obstruct again you guys or me over here. So I will share the screen again. So and then I will start explaining from the beginning. I will start now. Here is the screen we are once again. Now I have to remove all these indicators. To remove indicator from your chart, you simply right click. When you right click, you see indicator list. So you click on the indicator list, you bring out all the indicator that you have. Now I want to remove this that. I click on it, click on delete. So it will be off my distance. So I want to remove some of this trend line. So you can click on the trend line by removing them. So click on it and remove them. So let me leave this for now. Okay, possible. Let me remove this as well so that I can start from beginning again. So So I just hope that we guys will all see this the screenshot very well. So let me stop and go back again. So I'm trying to go back again just to make sure that we get it right. So now here we are in the screenshot. So on this MT4 now, we have a candlestick as our chart. Mr. Das have explained yesterday that we have three different types of charts. So this is where I will start over again. We have three different types of charts. We have the candlestick, we have the bar chart, and we have the line chart. So popularly, most traders prefer using the candlestick, while some professional traders use the line chart. And you can also train yourself to use either the line chart or the bar chart. So it depends on the one that you believe you discover giving you the clearer picture of the market. So after today, I think you should be able to try other charts to see the one that you will actually understand the market, that will make you to understand the market properly. So now currently we are on this is a candlestick chart. So let me now move to the line chart. So here we see the line chart. So the difference between this line chart, now you will not actually see an image of any stick. So you can see that it's just a line. So that is why we call it a line chart. So the line chart draw the line from the previous uh, closing price to the next closing price. You know, a price, maybe you are using 1 hour, 30 minutes, each of them, each of that 15 minutes, maybe you are using 15 minutes. For every 15 minutes, there's always a closing price. So it's where the price close at that 15 minutes. The next 15 minutes will pick up from there. So it will not end at the closing price of this one. So it simply means that in the line chart, a line is being drawn from the uh, a total price. Here now, trade now, this is just like a value. So a price was actually closed here. So the next price was closed an uptrend to this place. It dropped to this place, which is closing price. So it's not easy to understand, but majorly if you want to use this particular chart, it's good when you want to use it to draw your support and resistance, as a major support and resistance. How do you do that? On this, you use a longer time frame to draw your so that when you see one of those lines, you will actually know that this this line represents a support or a resistance of weekly chart or a monthly chart. For you to be cautious, either you should close your trade, either not to enter trade at that moment, either to enter at the break of that particular resistance or support line. So you use trend line, you use it to draw a line, most times support and resistance, because you actually pick the closing price. That's what it picks. So you can see some support here. So you just pick it and just place it. So I didn't actually explain this to you before. So I will still explain it. So I just want to use this opportunity to explain it to you guys now. So you can see these are how you place it. So when you go to a shorter time frame now, you see where these lines are actually at. So when the market is approaching, so you may need not to buy at that time, because you know that it's already getting close to support zone. So let's now go to a shorter time frame. You can see this now. It means that this market is already at a support or a resistance zone. So that is how, one of the reasons for this, how you should use this majorly. So because the candlestick has a lot of advantage over this, because it shows you the image of the price proper. It shows you the open, the close, and the rest. The same thing like the bar chart. So look at the bar chart. In this bar chart now, it shows you the price is little complicated as well, but still some people use it to trade. Some people based on this in their trading. So you see how the bar chart has actually formed. So you see the image, a long stick, the below is the low price, the higher price, the middle you get the closing and the opening price. So now we go proper to the candlestick. Here we have the candlestick. So this one actually shows the clear picture, of the reaction of the market. So we get the clear picture of the reaction of the market when we actually use the candlestick chart. So you can see it. So these are the three major charts that you have, and you can try any of them that you believe will give you the clearer picture of the market. So I will still draw a trend line on this so that you can see how they can still work together. So now the next stage I want to go into is a new order. So for you to place your new order, at the right top of your MT4, you see the new order option. All you need to do, you click on it. So under new order, you have the page that is open where we have the symbol that shows the currency. Maybe you want to change the currency that you actually have on your chart. So you want to change it, you can change it from here. So now you have the volume. Here you have the volume. Here volume also mean a lot size. In case, because me most time I like using lot size. I like using lot size. So I don't use volume. So if I want to teach you, maybe I want to send you a signal, I will tell you, say, okay, use so lot size. So I'm referring to the volume. So this is where you change your volume. So I've said it over and over again. Like this particular account I'm on, it's actually a micro account. So and on micro account, the minimum volume you can use is 0.10. So 0.10 is just like you are using a 100 units of a currency. That means you want to trade on just a 100 unit of a currency. So you use a 0.10. So now what does this actually mean on a micro account? You know, a micro account, as the name imply, is a micro, it's a small thing, a smaller thing. So now micro accounts lots, one lot in micro account is actually 1,000 units of a currency. 1,000 units of a currency make one lot of a micro account. So now under a standard account, a one lot is 100,000 units. So it means that if you set one lot under a standard account, you are already buying 100,000 units of that particular currency. So if it's under a micro account, setting one lot means that you actually buy just 1,000 units of that currency. So now when you want to buy, you buy 100 lots. It simply means that what you have in your account must be able to cover 100,000 in dollars. So now that's where leverage comes in. So it depends on the leverage that your brokers offer you. If you are giving maybe ratio 1 to 500, it simply means for every $1 you drop down, a broker will allow you to trade on 500 units of that currency. So now times it, if you have, maybe you have $1,000 in your account, it means that 1,000 times 500. So those are the currency that, so it's above 100 units of currency that you can actually trade on with $1,000 if you are having 1:500 ratio. So let's go back to how you use this lot size. So as I've said earlier, now it means if you want to set a standard account, you must input the number that you want to use, because what is here now is below a standard account. So standard account you may use below 0.02, 0.03, 0.04, 0.01. Depends on what you have in your account. Now, if you are using 0.01 on a standard account, it simply means that you are buying or selling 1,000 units of a currency. Remember, I said standard lot size is 100,000 units. It means that if you set one on the standard account, you are actually trading 100,000 units of a currency. So if you set 0.10, it means that you are actually trading 10,000 units currency. So if you now set 0.01, it means that you are trading 1,000 units on that standard account. Now, under micro account, you cannot see, under standard account, you cannot see 100 units. The minimum in standard account is 0.01, which is 1,000 units. So under micro account, you can go as low as 100 units. You can trade on as low as 100 units, which is 0.10. So that's for that on how to use your lot size. So on micro account, you can decide to use 0, 10, 1, 2, 3, 4, depends on what you have in your account. But under standard account, you use from 0.05 downward to save your money in your account. Now we talk about the lot size. This is your stop loss. This is your take profit. Now, how do you place a trade? The first thing you ask yourself, if you want to trade, are you buying or you want to sell? Are you buying instantly or you want to wait for the market to meet the particular price before you enter buy? Now, will you have to be on system when possible the market will hit that price at which you want to buy? That is where we have different options make available by Forex market for you not to miss any opportunity. So the first thing that I want to discuss here now is the market execution. This market execution simply means that you are buying at the market price. Now this is where the market is. So once you place buy or sell now, your trade started reading. Under this now you set, before then you set your stop loss. Now if you are buying, you want to buy, you want to place a buy, your take profit will be above the price at which you want to buy if you want to make an instant buy. Now, so the price, you see where the price is now, you simply set your take profit above it. Maybe you set it on uh, 600. That's your take profit. Now your stop loss will be below the price at which you will enter the market. Now that's the current price. So now these are the scenario how you do it. Now you can see the price. Buying this market now, your take profit will be above uh the price at which you want to buy now. While your stop loss will be below it. Why are you setting stop loss? In case if the market go against you, so that you can easily exit the market and still save some money for other trades, because you may not have it right always when trading forex. There are sometimes you will lose, but try and make sure that the time you lose is one nine winning, maybe eight winning, one lost, two lost. That's a very good winning ratio, and that period you must try and exit the market on time. So that's for buying. And so now if you now want sell, when you want sell, it simply means that the base currency, which is the first currency, is going to be weak against the quote currency. So you are simply saying that if the as you sell now, you expect the market to start coming down. When it's coming down, you are making profit. Now your take profit when you sell is below the price at which you enter trade. So your take profit is below the price at which you enter trade if you are selling. Your take profit is below the price at which you enter trade if you are selling. So now your stop loss will now be above it. The price I want it to get to before you exit, so that you don't lose much, will be above the price at which you enter the trade when you are buying. So your stop loss will be above it, while your take profit will be below it when you are selling. So I think this is clear. Now maybe the market is moving and you want the market to get to a particular price before you join the trade. That's where pending order comes in. And you may not have the time, or the market, you expect the market to move with force. Because if market move with force, it's very hard for you to place an instant order, because the new quote will start coming. So in that process, you may miss opportunity. So that's why it's either market will may likely move fast that you may not be able to take advantage of it. You place use the pending order. So as market is moving with force, you just trigger your order and it start moving where you. So under pending order, we have four types of pending order. We have four types of pending order. We have the buy limit, we have the sales limit, we have the buy stop, and we have the sell stop. Now let's start with the sales limit. So buy limit. So we have set our buy limit now. So we want to do a buy limit. So now the thing we want to do now, we want to set our, I said micro account. We want to use one loss size, which is 1,000 units of currency as our loss size. Now we want to place our pending order. The pending order we are placing is that we price of the price of buy stop pending order is below the current price. Sales limit pending order price is always below the current price. So now we have the price at 82, which is the last two figures. Now we place our pending order at 60000. That's our buy limit. So we are actually saying, okay, let me set it first, then I will explain it. So now our take profit now will be above the price at which we want to enter the trade. The take profit will be the price at which you want to enter the trade. The stop loss will be below it. So when after setting, I will now explain it. So it will be, I use so that you can see it. So here we come. Now we have set everything is intact. Now we place our order. So you can see it. Now, how will this trade actually trigger? Because we want to buy, or we are expecting the market to come down to hit our buy order. So now this sales limit simply means that you are expecting the market to get to this point, and once it get to this point, the market will reverse back. So now if the market get to this point and reverse back, you start making profit. So you are assuming that the market will get to this place, but you will not be able to have the strength to go further down. So if eventually you get to this point and it trigger your order, it means that you are already on buying position. So you are already on buying position. So when once the trade is returning up, you are making profit. So likely if you set your take profit here, so once it trigger it, it take you out of the market and the profit will be credited instantly to your trading account. Now if peradventure as it hits it, there is still on the side of the both currency, so it will start coming down. So once it start coming down after hitting your sales limit, it means that you will be losing that trade. As I've said, your sales limit, your buy limit have to be set at below the current price, and your take profit will be above both the current price at your sales limit, your buy limit price, while your stop loss will be below it. This is for this. So now you set your buy limit, you hit it and return up. So I will give you that instance when you can easily use this particular pending order. So once I finish explaining orders, now we go to the next one is buy stop. Buy stop is different from buy limit. So this buy stop, the price of buy stop is actually above the current price. We believe that if the market is able to pick up and reach that point, there is possibility of it going up further. So let's set our pending order. I will set in a very nice place that you can also use for a retrade maybe tomorrow. So now we set it here, and then our take profit also, both the buy stop price and our take profit will be above the current price. Both take profit and this buy stop price will be above the current price. So our take profit now, let's set it at 500. So now the stop loss will now be below both the current price and also the buy stop price. So now it's ready. Look at it. So we have set our buy stop limit. So if this market eventually return up and hit this, you are believing that it will continue going up till you will hit your stop, your take profits. And you can also adjust your take profits. You can modify it if you feel that the market will move higher than that. These are where you can move it, so you can move it. So if you feel that there is need for you to adjust your stop loss, you just put your arrow on it and drag it down, so it has modified. So if you now feel that you want to adjust your pending order, your buy stop pending order, so you can move it, so it will move everything. So okay, so so you can see it. So you can decide to move your buy stop pending order by just placing the arrow on it and left, and hold the left uh click, so you can see it. So this and how you set your buy stop order. to click, right click, and you can see all the offshore came out. You click it, and so now if you now want to sell, we are talk about sales order. So now sales limit, the price of sales limit is above the current price, because you believe that once e move further up, once e hit it, you are expecting the market to return down. So how do you set this? So let's do example. So the market is currently, look at the price. So the price I will set here now will be above that price for it to be valid. So I set this amount. So now the your take profit will now below both the current price at your sales limit price. So here now, let me put it at this. So now your stop loss will be above the sales limit. I just hope that we understand this. So here we go. This is our sales limit order. Here's our take profit. So we assume that if this market will turn back here and hits our stop loss, the market should be coming down. So if for any reason the market refuses to come down, it means that you will be running at loss. So you must able to do a proper calculation when you are using sales limit. Though me, I don't use sales limit. Mine is buy stop or sell stop. I don't use sales limit in my trade. So now you can adjust your take profit to any level by just holding the right click, the left click, and then you hold you can adjust your take profit. So you can also adjust your stop loss. So you can adjust it. So you can also adjust the whole order. Adjust it. Though this order cannot be below the current price. So if it be below, it will be invalid. So the sales limit must be above the current price to be valid. So let me place this below it now. We'll see it will reject it. You reject it. So now I can only go above it. So you can see. So that is how it works. So once you hit it, you expect the market to start coming down. And then once it's coming down, you start making dollars. So that's how this goes. Now, lastly, we talk about the buy stop. Now, on this buy stop, your price you are setting must be below the current price. So now here is where the price is. So we are removing the 600, the 60. So that is below the current price. Now, our take profits also will also be below the current price, and also our buy stop price. So now let's reduce this to 0.700. Now our stop loss will be above both our current price and our pending order price. So let's use this. So we have set our pending, but check your volume so that you don't use the wrong volume with your trade. So that maybe you have a smaller account, you now go and use a higher volume. So if you have a standard account, make sure that you check this volume, because you must not use one, you must not use 0.10 with a smaller account. You must reduce it to as low as 0.0231 or 0.01 when you have a very small account and you have your money on standard account. But if it's on micro account, it save you using one, because one lot size of standard account or micro account, I repeat, is just 1,000 unit currency. So there is it. Let me place this order. Now this order has been placed. Buy stop. You can see the price is below it. I said it. So once you hit it, now you expect it to start coming down again. When it's coming down, you start making profit. But if you return that up, it means that you are losing. So that is the essence of setting the stop loss, so that you can minimize your losses, so you can exit the market on time. So this is it. So you can also adjust it. Adjust it as you like. You can decide to adjust it. So you can decide to adjust the whole order. So this is how it works. Now the last one that we also discussed here is the trailing stop. So now when you are using a trading stop, so you are simply using a trading stop mostly when you have a movement, a rapid movement in the market that you need to take the advantage as the money is coming in. You need to be closing up, you need to be uh, covering some profit, part of your profit. So use your trading stop. So this trading stop, maybe you use 100 points, maybe you can use 300 points, maybe you can use 400 points. It depends on how you get to move. Let's use, now we are using 300 points. Here is a table of, here, okay, 300, just have your point from here to our entry point is 7, is 800 pips. That is 800 points. Reduce it at 500. Means that if this market hit our okay, if this market hits our C stop now and it's a fast moving market, the market can drop down to this extent and return back within 3 minutes. So now this trailing stop helps you because in this move you can easily stop your trade because market keep changing, the price keep changing, price within 2 3 minutes. So this trailing stop will be able to help you to make profit out of it. So if you step, maybe your trailing stop is 400 points. If market move to 400 points somewhere here, your stop loss will count 400 also points, move down and cover 400 points. So if it move another 400, your trailing stop will move 400. So the trailing stop will be moving for 400 points of moving your stop loss at for 400, for 400. Anytime the market moves to 400, the trailing stop will move also to 400. So sometimes we advise that you should not allow your trailing stop to be too high, maybe maximum of 250 points, so that you will not miss the some opportunities. So that is all about the trading stop. We are able to understand how to place trade, pending order, instant execution, you buy or you sell, you look at everything here. So we are able to understand this. Let me close it. So you right click and you close it. So now we come to how do you have a chart. Now sometimes if you have a new chart, you have something like this on it. You have something like this, but for you to have your chart to be widely open, you can cancel it by clicking here. So it's open. So anytime you want to import any, you want to bring indicators, you just click on this and you have all the few indicators. You can see me, I don't have my indicators here because as I've said, I formatted my phone to my system today. So all indicators I have, I've lost all, so I will try and recover them again. Now, this is what we have. We have the stochastics, which is a general, a popular one. We have the ISR, we have the zigzag. So let's use this zigzag now. So this zigzag majorly is used for maybe a trending market that use zigzag. So it allows you double click on it and you say, okay, now you have to close it so that you have a very wide picture of this market. Now you can see this zigzag. So this zigzag actually help you to filter the market. It help you to filter the market and give you a clear direction. You can see how this market has been going so far. It has been an uptrend so far. So this zigzag are able to help you. to filter the market and tell you when likely the market is going to reverse. So as we have seen that the rule, the uptrend rule has been broken. Now we have the zigzag trying to form a down. So this is all about the zigzag. So we have other indicators that you can also just double click on it. So after double clicking, bring it out. You just need to double click and bring it out. So that's how you set. So we have some indicators on already on the metaphor that you can train yourself, or if you need more, you can chat me directly and I'll be able to. So now let's not forget, let me show you how you can set moving average, which is the popular one that you people use to follow the trend. Now if you want to cancel, you want to clear this indicator, just right click indicator list, just click on each of them, delete, click and delete, click and delete. So let me leave the zigzag. So now this is what we still have. Now if you want to import moving average, so you simply go here, you see under trend, this is where you have trend plus, and you click on it, so you drop down all this. So this is moving average, so double click on it, right? So now here we are. So this moving average is currently on 14. So and the popular moving average that traders use, maybe let me tell you, you can use 10 exponential. So this is how you set your moving average. So either close or open. Use close for 10, red, red. So now if you want the line to be bold, so this is where you change your lines. So if you want to change the color, you can change the color here to any color of your choice. So close, open. So exponential, you can decide to use smooth, simple, smooth. So those are the popular ones. So 10, 20. So you use this one. So this one. So let me make it bold so that you're able to see the line very well and see what I want to explain here. So I have made it bold now. So now you have to go back again and double click on it again second time. So you set another moving average. Maybe you use 21 moving average, same exponential, but you change the color so that you're able to differentiate between the 21 and 10. So because you want to use it when they are crossing. So some traders use this strategy to trade. So you only watch when they are trading, and also it acts as a support and resistance also. So when they are moving, so you can see this is very too close. So I can't use this, so I will have to adjust it. So I have to adjust. Okay, this one was actually open, so I change this one to close. So you can see that there is a little bit this thing. So you can see it. So this is the moving average. How to set moving average. So let me set a higher one. Let me change to a higher moving average so that I can have the proper way that you can trade this. I'm changing this one to 50. I'm changing this 10 maybe to 21. So you can see. So now this one gives us a little bit clearer picture. So that's the reason that you should use a little bit higher moving average. You can see this. So this one's acted here as a support on the 50. The moving average, the you can see it acted as a support. So you see some weak candlestick. So it acted as a support. Here now you see, you can still see it here. So you see this place. So it was acting as a support. So it was acting as a, so it simply means that you can also use moving average to identify support and resistance levels. So this is how you set your moving average. You simply come to this area. So let me go back again. You click on the trend, you see a trend. So you double click on it, then you set your this thing. So you can set as many as moving average that you believe can make your sorry, you can use this. So let's want to trade on a long time, use moving average. So on a bigger picture, you're on a bigger picture. So you can see what's happening. So this thing it has been on a higher in the long trend. So on weekly, it's still showing another trend. So we have this here. You can see this has been a wonderful thing. So just imagine that you have this and you're able to monitor so for on a longer time. So maybe you place your trade somewhere here. So just leave it open. You can see that the the 21 the uptrend 4 hours. So he has been trying to protect the uptrend right from the beginning. It's on 4 hours. So now the possibility that if he's able to this one on a high top about the trend. So I need to so I'll click on this tunnel this thing. So how do you start draw your trend line? So actually this today class I didn't talk on trend line, but let me just draw this trend line to see this wonderful uh, thing. Okay, let me draw this trend line. So this is how you draw a trend line. See trend, see thing again. Confirm this on a smaller for you able to hence